Excellent. So welcome back to this second session of Hoist Capital Markets Update. And next, we'll have a Q&A with the country heads at Hoist. Harry gave all of you an introduction, and now I'll get the opportunity to drill down a little bit deeper on your different markets. So let's start with you, Andrea. You're the country head of Italy. That's Hoist's largest market. There's been quite a lot of debate and discussion about, Italy, the credit risk, and the market overall. So, with all of your experience from the market, what can you tell us about how it's evolved over the last few years?
Yes, with pleasure. Good afternoon, everybody. It is a fast-changing market, Italy. Likewise, the most of other markets. The major change, the motor of the changes is basically the fact that from very substantial peak of NPLs stocked in the banks and a very high generation of new flows of NPLs, which we have seen in the last years. The peak being more or less in 2015 in Italy. The market has reduced importantly. And so it is interesting because in the last 2 years, we have seen more or less the bottom of the stock in the banks, in NPLs in the banks, and the bottom of new generation of NPLs. And we still managed to grow our book in Italy. Taking the opportunities of some structural strengths that we have built over the time in our Italian platform, following a little bit the philosophy, the mindset, and the strategy that the group has in general. First of all, of course, we shifted from the primary market to the secondary market because, of course, the stock has been exited from the banks, but it's not been collected yet. It's somewhere else, and so we did. Important deals, constant flows of new deals on the secondary market, which has helped us to keep the pace of growth that we wanted to have. Then we benefited, of course, from the fact that some two very large competitors has somehow expired. And the first one has been the GAEX, which has been this instrument, public guarantee deals that has helped the banks to the leverage that somehow amounted to 120 billion euros of value of the stocking, and which of course was not an addressable market for us. It expired in 2023, and we see the effect of that. And the second powerful competitor that somehow has stopped has been AMCO, public owned bad bank that has bought more or less 40 billion euros of NPLs, and that has finally changed their strategy and stopped purchasing. So we benefit from that. And we also, more in general, benefited from the fact that the market has become much more granular. Lower, the same, more or less the same amount of deals, but with much lower volumes, which is very good for an investor, sophisticated, industrially prepared to underwrite constantly new portfolios. You have somehow heard the presentation of the investment team, which is centralized, powerful, very well organized. And we, in a market like Italy, where we now have a lot of deals, but of smaller amounts, you need to be very efficient to properly underwrite and due diligence smaller portfolios, still in a sophisticated way. Not everybody can do that. We are in a position to do that, and so we are in a position to compete also in this market of lower volumes, which is not that obvious and requires to have a certain capacity. And finally, sophistication. I mean, of course, Italy is being and still somehow is the largest European market of NPLs. So everybody has been there. Everybody is still there. It's a very competitive market, which is good because has somehow trained ourselves to be extremely efficient in a number of selected asset class. And now that the market has proven to have lower volumes, of course, the competition is very strong, and this requires a specialization. And we hopefully are extremely focused in a number of selected asset class. We want to be there, and we are efficient in those asset class. So in this particular moment, we proved to be profitable in the investment we do, and we are capable to grow. We are at the bottom, and the Italian economy has not changed in its structure. So this bottom cannot but go to the historical average, which is more or less with volumes which are the double than what we have seen in the last 2-3 years. And so we expect that the increase of volumes will help us, but to further grow. But we still have had the possibility, even in these years, to provide a growth and an increase in our profitability, which somehow satisfies ourselves and the targets that we had.
Excellent. And maybe just a short follow-up on that, actually. So, I mean, in Italy, some of the largest banks have quite close partners, like you have Intesa, you have UniCredit, which has some devalue background, etc. Has that Hoist to an extent your pipeline?
Not really, because these long-term agreements that the banks have undertaken with specific servicers are more on the management on the loans. In parallel to that, the banks have continued to sell, to dispose of the assets, and even accelerated somehow the disposal of the asset, having a specialized servicer helping them to build, to improve the data set. They have found it easier to go on the market and sell the assets, and we somehow benefited from this more professional approach that has helped banks to together with their servicer to manage the assets. So I think it has been a positive impact, all in all.
Excellent, thank you. Then I think we can move on to Enoch, actually. So,
hi.
The head of growth markets.
Yes, I am the head of Sweden, Belgium, Netherlands, UK, and hopefully other markets coming.
So what
Yes.
can you tell us about the growth journey if you're head of growth markets?
Yeah, I think the key point is really this, what was mentioned before about the return on equity being really key in all these things. I mean, we have shifted focus since rejuvenation towards return on equity, and I think that is really the key. And also tying into what Fabienne said before about the huge network among other banks, and I mean, they like doing business with us because we're also a bank. Then we see a lot of transactions coming in, and given that we also have a very sort of short time to market and going into new markets, when we see something we like from the network of or the partners we work with, also servicers, and they come with something, if we like it, it's quite easy for us to just extend and leverage that relationship into going into new market. But I don't think it is that important which market it is. I mean, for sure it will be adjacent, but the trigger will be that it will only be when the price is right and we feel that we can make competitive and good enough returns on it.
And I mean, historically, Hoist Finance headquartered in Sweden, but you haven't really been buying portfolios in Sweden until quite recently. What made you take the step in, and how do you see the competitive outlook here in the Swedish market?
I think Sweden has been a stable market, almost a little bit boring, right? So you have these hybrids who have been dominating the market. And now, as they're moving into a more capital light strategy, many of them, suddenly I think the market structure is changing, so that instead of having these hybrids dominating, you get more clear roles. So you have investors, such as ourselves, you have servicers, and you have sellers. And I think for us, that is really a good thing, because we have many, many years of expertise. We understand the asset quality really, really well. So when we are competing against investors who are maybe based in London or in other places, I think that we really have a strong edge to compete, basically.
Excellent. And then I think let's move over to you, Miguel. So you joined Hoist in 2019, right?
Yep, correct.
And in Spain, you've been growing your secured book quite a lot. So maybe you can spend some time on that. And how do you expect that to continue? Do you expect to continue growing the secured book?
So as you say, that's a pretty recent development of the group. We entered the market some 3 or 4 years ago, not more than that, and with major moves even more recently. So it's extremely recent. We've had really encouraging results yet to date, and we believe we are still developing the platform, improving the hand we have, the grasp we have on the processes and the performance. So we of course expect to keep improving and become better and become more competitive in the acquisitions that we consider. So we of course expect also to consider new opportunities for growth and develop that business further.
And I mean, generally, there's been several players in the industry that struggled in Spain historically, right? So what can you tell us about the market? How has that dynamic changed over the last few years, and what makes you hopeful about it going forward?
The struggling has been more evident in the unsecured space, I would say. The industry has changed. The overall volume is big and stable, and we don't expect it to shrink anyhow. But the number of issuers has actually been reduced through mergers of banks that have been really frequent. In the buying side, there has been also some capacity reduction through mergers, but much less so. The reduction of capacity has happened more in the secured servicers, who have struggled because of the real estate bubble burst several years ago. Those services were created with massive capacity, and once the burst was sort of digested, that capacity was excessive, and they are restructuring gradually. So the unsecured players are the ones who suffered, and also the secured servicers. So for us, it's a sort of a thing that benefits us. The market, the interest rates, of course, favor us, as we explained in the beginning of the day, and some players are getting out of the market and leaving us better space to compete.
And Andrea told us a bit about how Amco has reduced their purchasing in Italy. How has that development been with Sareb in Spain?
Well, Sareb is a company we don't really do much business with, precisely because what we explained about the single names. Sareb is a lot about real estate developer loans defaulted. So there is a lot of very high tickets. There is a lot of real estate developments midway. So it's something we don't really go after.
Excellent. Then let's head over to Mr. in the back there with Makram. So, I mean, you joined Hoist quite a while ago, right?
Yeah, exactly.
And in 2012. And I think France has been one of those markets that whenever we speak to any company, industrial player in Europe on the NPL sector, France has always been, this is the El Dorado where everyone thinks that they'll have all the growth. But we haven't really seen so much disposals from the banks. Could you tell us a bit about what's been holding back so far?
Thank you, Armin. Good afternoon, everyone. I would just start with setting a little bit the stage here by giving you 3 figures. The first one is that 32% of Europe's NPL stock sits with French banks. This is to be compared with 2019, where this figure was 21%, meaning that other countries has really worked on decreasing the NPL level, whereas France, we can see that nothing really happened. And as a matter of fact, that takes me to the second figure I want to talk about, is the fact that inflow, the annual inflow that we see is about 3 to 3.5 billion euros. This is the figure from 2023. Whereas the outflow is, on average, we've seen 2 to 2.5 billion being sold. So basically, you have about around it to 1 billion piling up on the stock every year. However, 2024 is expected to be a record year in terms of sales, as we expect it to close with about 4 billion euros of NPL being sold. So we can see a little bit of change there. The second point is, why do banks behave like that in France? And historically, banks have preferred internalizing the management of their NPL for different reasons. I'll start with the first one being the fact that they always wanted to have control on the customer relationship with the hope to get him back. The second one being that they never were a little bit troubled with their NPL ratio. The NPL ratio in French bank was at about 1.5 to 2% maximum. Now we are we are at about 1.5%. And we even have some banks that never sold on the French market. They are still today, they have never sold any NPL, one of them being a big bank, Crédit Mutuel. But that leaves, big doors open. So the potential is there. And the last point is to finish on a good note, is basically that we see that they are facing a strong pressure from two elements. The first one being regulation. The regulator is shifting from looking at the NPL ratio in the balance sheet to looking at the stock of NPL, and is asking banks to really focus on dealing with the stock they have. So we have the backstop regulation that came in that basically is really putting pressure. And the second element is really important as well, is the profitability. French banks are suffering from a very high cost income ratio. And the second element is the ROE. When you compare French banks' average ROE, that's a little bit below 8%. When you compare it to average European other banks, it's about 11%. So there's a significant lag, and if they want to be competitive, they need to actively manage that. So yes, at the moment, there's a massive stock, but we have high hopes that the French banks get in this active management and selling those stocks they are sitting on.
Excellent. And Hoist has been in France since 2001, I believe. Do you think that you're well positioned to benefit from that volume, or what makes you believe that you are?
Exactly. I mean, we are present since 2001. We've acquired our first portfolio and have been active on the market since then, really working on becoming a trusted partner to these sellers. And today we are working to be capable of addressing this market by first being positioned on all asset classes. As long as the portfolio is granular, we are a partner. Second, we have a strong data set that we've acquired over time. We have good expertise, and we are competitive including thanks to our funding. So yes, we are a serious buyer in the market, and we plan on being the leader on that market. And last but not least, we have developed also a mixed servicing approach between internal and external capacity to eventually be capable of taking volumes.
Great. Thank you, Makram. So we can move over to you, Michals. So you're the COO of Hoist. And one topic I thought we could discuss was during the year, you've done some IT insourcing. So I think you went from like 100 external resources to about 50 internal instead. Could you tell us a bit about what made you take this decision?
Thank you, Armin, and good afternoon, everyone. And there are actually a number of reasons why we decided to go this way. First, there was a strong business case actually to do that. Second is that our business model requires agility from IT specifically. So IT follows the business, and we believe that having IT insourced produces that agility for us, which we found difficult to achieve with the outsource model. And the third, last but not least, is that IT, cybersecurity, data, those are the strategic disciplines for us. Those are enablers, and to extract more value or maximize the value that you can extract from technology. And one way of doing that is to keep technology and this team's closer to the business, sharing the same objectives and same values as the rest of the organization. So those are the key reasons why we actually decided to do the insourcing of IT.
Understood. And you touched upon it a little bit here that IT is quite a strategic asset. I mean, we heard Fabienne before talk about how much you're using data for pricing and everything, so machine learning. Can you tell us a bit more about how you're using like machine learning, AI, etc.? Buzzwords, obviously, but super interesting how you can leverage it.
No, I think AI is, we cannot deny it. It's actually entering our day-to-day life, not only personal, but also professional life. At Hoist, it's a different scale of utilization of those technologies. On a smaller scale, we enabled Copilot for all employees who are willing to use it to simplify their daily professional life. On the larger scale, when we acquire portfolios, as an example, we acquire lots of documentation related to the loans with the different historical interactions, what happened with the loan, how the originator interacted with the loan holder, etc. And for that, we actually deploy AI models to extract this historical information, but also to improve the data quality and enhance the data set that we are then loading into our collection systems. When it comes to the data, that's our core asset, as I mentioned before. And to support this core asset and to keep it in a good shape, we are finalizing now our transition of our data platform, a central data platform from the old technology into the cloud to support different functions, including investments, including loan management, etc. And that sort of builds a platform, a future-proof platform for Hoist, which would enable us to go further. When it comes to AI in terms of communication with the customers or debt holders, here we are dealing with people who are in distress situation, and I think AI is not yet there to be able to support people in those situations, and those solutions typically require human-to-human interaction with the tailor-made solutions. But the technology platform that we have laid out so far is positioning us very well to absorb those new AI solutions when they will come to the market.
Very exciting. And last but definitely not least, let's head over to you, Sarah. So you're the country manager of Greece.
Yes.
And I believe you entered the Greek market in 2018 with Hoist.
Indeed.
And it's a little bit different country compared to the rest for Hoist, because that's always been an outsourced market basically for you. Could you tell us a bit more about how that works and how you work with strategic loan management in Greece?
So it's a quite dynamic model. It relies on data steering and local market expertise, aiming to maximize efficiency and synergies with the outsourcing partner. Curiosity and continuously challenging our partners in both their performance, but also their ways of working, processes, is driving continuous performance improvement.
And I mean, what are the keys to be able to be successful with an outsourced model here?
Starting from having a clear process on how we select the partners with whom we work and how we constantly review them. Then it's transparency, clear roles and responsibilities between the parties, and a set of common goals with the ones we work. Lastly, as already mentioned, is steering through data-driven decision-making and strong local market expertise.
And then maybe lastly, just on the supply of volumes in Greece. I think after GFC, Greece was a very hot market. I think we read a little bit less about it nowadays. What can you tell us about the situation there?
Greece is currently shifting to the secondary market. The primary stock has been sold. We are now on the last round of the HAPS scheme, which is the government guarantee scheme. And we expect the market to pick up more on the secondary part in the coming years.
Excellent. Thank you very much. And I think we'll actually invite Christian up to the stage to start the next session. Thank you all.
Thank you.